What's up, guys? Welcome back to another video. In this video I'm going to be breaking down one of the trades I took earlier in the month. I didn't get to break it down before, and it was a pretty decent trade, to be honest. So I just wanted to break it down for you guys very quickly. So of course, we always start with a higher time frame. I like to go to all the way up to even like the 4 hour, but 1 hour does the same trick for me, I believe. So as you can see right here, and that's why I love order blocks and rejection blocks a lot, because you can see clear reversals of them. So this is a 4 hour rejection block marked out right here. You see it tried to break through, it didn't, it respected it and started going back up, and actually broke through this EHPDA as well. If you don't know what that is, which I didn't as well for quite a while, it's an event horizon PDRA. So basically is ICT indication, of course, but it's like a new week opening gap, new day opening gap, and the average between them. So it does actually, it basically acts as a resistance or support area for you to see potential reversals. As you may know already, I trade majority reversals unless I know exactly where price is targeting. So that's the only sort of continuation trades I will take. But this is basically the bread and butter of my model, this trade especially. Now, so obviously looking at this, we have been bullish. As you can see, we have been bullish. But we did respect this PD array right here, this PD right here. We respected it. Now if we go into the lower time frame, which I love to do as well, just to make sure everything stacks up, because you can stay on the higher time frame and it doesn't match up, and you go lower and it makes sense. So as you can see here, it tapped into the 30-minute order block already, which gives us even another opportunity. If we had a limit right here of order block alone, which I've not done, that's another entry. So you have a new I believe this is a new week opening gap right here. If we look back, let's see. If we look back, that's a new week opening gap. Yep, that's a new week opening gap and the order block in the same place, which is a decently strong confluence in itself. And also, if you look over here, I believe it's actually even in a low volume area as well, potentially. Yeah, you could say that, of course, rewinding time backwards. Yeah, so that would have been a decent entry, or you would have got the edge of doom probably, like I've been getting. If you've been watching the content, I've been getting edged to my limits. That's why I like to watch the charts. Anyway, let's get back into it. So we basically had a respect of this PD array, this average PD array in that sense. So if we drop down even lower, you'll be able to see, I call this a respect of this zone in that sense, because if price really wanted to continue up, it would just burn through this and there's nothing that will stop it. But we have these order blocks stopping, holding it back, and we have these sort of new week opening gaps, etc., holding it back, and the PDRA is holding it back as well. A few FVGs, if you do trade FVGs as well. Now what I was looking for was it to either break ahead and then look for a retest to go above, but instead it broke up, went back down, and what I'm always going to be looking for is a retest of this PD array, EHPDA array right here. So what I normally do is I wait for a retest. So when it breaks, wait for a retrace, have either a limit here or extra confirmation. Now what do I call extra confirmation? I call extra confirmation like different confirmations, like the fib levels, for example, or where there is on a volume profile, how much volume is in that area. Now as you can see, as an extra piece of confirmation, we have the golden level of the fib. If you do trade fib, you know the 705 level is amazing, right? And it's right between that and the 79, which is the most premium you can get as well. So it matches up on the 15-minute time frame, higher time frame too, which you know just gives me the confirmation even more, right? So as you can see right here, you go into the 5-minute, we have a rejection block down here, and we actually have another PD array average as well. So what do? I can see that it tried to break above, came below, tried to break again. So it tried once, came below, tried twice, came below, did not break it. So I'll be looking for a retest of it right here. So if we play this for 1 minute, this is where my entry would be. Recently, I've been doing a lot of limits. I'm looking to actually change that up a little bit more as well. So because it's between them two, I would either have my limit on it right here, or on the actual, because it's between the range. A lot of time it wicks past it as well. So ideally, I will have it here because it's going to wick into it and then go from there. But it just depends. It's just discretion. If you're limiting, then it's discretion. But if you're watching the trade live or whatever, then you would, naturally want to watch it. But because this is like an Asia session sort of trade, I'll just limit it, and then if it hits, it hits. If not, then I get edged, like I've been getting a lot of as well. But at least the understanding is there, and the actual, skill is there of seeing it happen, which is good. And it comes to that range as well. So just like I said, your discretion of where you want to put your limit, if you are to limit and leave it. So what we wait for, we don't enter no trades until we see it. These are 5-minute sort of order blocks, rejection blocks. We don't care about those. We care about the higher time frame ones, which you have support off. So like I said, we're waiting. Asia opened, waiting. If we don't get that golden range, we're not entering. And then, okay, I think we'll enter off there. The limit didn't start. So what we'll do here is, depending on what type of trader you are, a lot of people, it can be a 1 to 2 type of strategy as well, honestly. But depending on what type of person you are, then of course you use your own discretion as well. Me personally, I would put above the highs and go for like a 1 to 2. But I know a lot of people that also put it like here to make the risk reward more as well. But then of course you run the risk of it basically wicking you out and then going down as well. So to find a good balance, I'll literally just put it here, because if it's targeting those highs, it's targeting those highs, and you don't really want to be part of the trade. And then what I'll do, I'll put my take profit somewhere around basically like here to this 5-minute order block in that sense. And then we go on the 15-minute chart as well, just to get a better perspective, because we can easily just target all the way down here as well. But I like to keep it quite conservative. Not even, honestly, a lot of people as well would target the lows, and if your idea was bearish, but I still think it's going to go higher. So like I said, I go back to the 5-minute chart, see what it's going to do. Is, of course, it's tapped me in already. Then we should get a decent reaction. As you can see, reaction off that range. And then what I also like to do, just saying as well, what I like to do is, because you have two sides of your strategy. There's always two sides. When you use a fib, there's always two sides of a strategy as well. So what I actually like to do too is I'll come over here and map out another fib from here to here, and then set my TP as to where the reversal would be on my fib. So I'm not even going against my strategy. So my overall bias is bullish for this. It's been going up. It's bullish. And I'm just trying to get a quick scalp on this short. I'm not thinking it's going to dump all the way back down right now. I'm still bullish. So knowing this, I'm not looking for it to go and take out all the lows and fill all the gaps. No. I'm just looking for it to come and give me a little bit of, the trade, and then go from there and carry on going bullish. So what do? Map out my fib levels, put my take profit at even between here like that, and that gives you like a nice 1 to 3 even as well with this sort of strat. Then we let it play on. I know a lot of people go break even as well. I don't really like going break even, because price often comes back to your price anyway a lot of the time. And then you just let it play out. Like by now, of course it hit your limit, so you won't even see all of this shenanigans going on. During all this, you'll be like, oh my gosh, reversal, oh my gosh, it's gonna reverse, and then as you can see, full TP like that, boom. I don't know why the sound didn't happen, but anyway, yeah. So just like that. So that's basically like a way of the model as well. As you can see, it bounced off the 79. Of course, it broke past it a little bit more, bounced off 79. Let's see what it does from here. Because like I said, sometimes it breaks it and it just starts dumping, but sometimes it just also just goes from there. So imagine, look at that, boom, look at that right there, boom. So imagine, hit TP and then went from there. Imagine. So again, the bullish bias was right, and you would have been stopped out break even if you were trying to target too much. So like I said, having your bias is also key too. Where's your actual bias? Based on everything I can see, my bias is bullish. simple as. My bias is bullish based on everything I can see. So why go against the trend? Why go against that and try and target the most crazy R in that sense when I could just get a quick scalp, which I did. Yeah, so that's a breakdown of this trade. I'm refining the strategy a lot more. As you guys know for the channel, I'm not talking like I'm some guru. I'm just trying to refine and show you guys what I find and what's been working. And we've got on a decent win streak as well. As of course we're funded, etc. too. So we're just looking to just, you know, rack up as much as possible as well. So honestly, it's been pretty good. Everything's in a better stead as well, as you can see. But like I said, the more confluences you can actually stack up, the better it will be for you as well, I would say. Because of course there's lots of different strategies and a lot of different strategies do work, but you need to have the confluences that you can see clear as day, and you can always make it into like a mech model as well, as much as possible. But yeah, I hope you guys enjoyed this video. I hope you guys enjoyed the breakdown video. If you guys are looking to get a funded account, etc., use code MULLA on Alpha Futures and Top 1 Futures to get the best discounts. Also, I'm not sure if you guys know, but I've created an AI app that helps you with your trading psychology. So you actually log your trades, stuff like that. Check out my Instagram and other pages as well to find it. You can actually log your trades. You can actually talk to AI coach in there. And if you're, say you're tilting, you're over trading, you're doing, you know, you're going into a spiral, the app just allows you to stay focused, have that conversation, because not everyone has people to trade with. A lot of people I know are lone wolf traders. So why not talk to AI coach, have that conversation, say, hey, I'm about to range trade, what should I do? Stop everything you're doing, go walk, you know. So it has that conversation with you as well, which I believe has been very helpful for even me, because if you're watching the channel, you've seen I've had the ups and downs, craziest times. But then of course it's best to just have a grounded level and just, you know, have like a system that works for you, because at the end of the day, trading is a game of, you know, having confluences and believing those confluences and entries as well. So the more you can stack, like I said, I've just talked about a few different confluences. I even included the volume profile in it as well. We were even in a low volume node when we were in this trade, you know, which was another confluence for me too. So the more confluences you can stack like this low volume node, maybe a fair value gap, maybe like a high time frame PD array, new week opening gap, those can be the key sort of areas that you can enter and take your trades off to make more sense for you. That's it. And if you lose, it doesn't mean your model's bad, it just means it didn't work that time. And I see a lot of people changing. I've found this model like through having various conversations with various people. You know, that some people that trade fib, some people that trade market structure shift, some people that trade order block, some people that trade new week opening gaps only, some people that trade orb. I've had many different conversations. That's what's led me to this strategy that I have now, that gives me the confidence I need to enter trades, because that was a big thing for me as well, having the confidence to enter a trade and not thinking it's not going to go my way. Now I enter trades and I'm like, yeah, you know what, I like this setup, great setup. If it hits, I'm going to be happy and, you know, it's going to be good. If not, no problem. The model has worked time and time again. It just didn't work today, and that's it. So as you can see, as you can see right here, that's why I like to place the fibs both ways. So I have the high and the low, but also we have another high here right now after we touch the next low. So we want to have the fib again, and then set your TP at the 79 of that fib, so it gives you like a good risk to reward. So if the 79 or like 705 is here, you put your stops above to target the 79, and then if you're very sure about what way the trend is going, you can actually have a limit on the 79 here, so put your stops below again and catch a bigger move, which goes with your vision of where the market is going to go. So like I said, overall I was bullish, but in the short term I was bearish in that moment because of the premium price. Then it would flip back to bullish when it hits that 79 level, or it could break all the way down and fill in all those gaps. But again, we are in basically Asia session as well, the late Asia session. I'm not thinking it's gonna have the liquidity to just kill all of these FEGs as well. So I'm thinking it's still gonna be bullish to at least London session. And what happened? Boom, you had the short there as well. You know, so like I said, hey, everyone's Confluence are different. You may watch this video and be like, oh, bro, I don't see it like this, or you have your own way. Please comment down below if there's anything I can add, if there's anything that I've missed out on, and anything like that that you've seen that I may not have seen. Please let me know in the comment section as well. I don't know why I left this thing. It would have given you guys a better view. But appreciate you watching the video. If you're new, make sure you like, comment, subscribe, turn on post notifications so you don't miss a video. And I want to keep making breakdown videos for you guys like this every single day, or every single trade that I take on the new accounts as well. But yeah, thank you for watching. I'll see you in the next one. Peace.